Hey guys, welcome back to RWM Finance. So, in reading The Intelligent Investor, it has given me more information on how to invest intelligently. But to be more specific on how to invest more intelligently, it has broken it down into two categories: a defensive investor and an aggressive investor. So today I would like to talk with y'all about a defensive investor. Make sure to stick around till the end of the video to hear about an investment idea for an intelligent defensive investor. So if you haven't subscribed, please scroll down and click that subscribe button for me, and we'll just keep moving on. First off, I would like to share with y'all Benjamin Graham's definition on investing. So an investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Investing, according to Graham, consists of three elements. You must thoroughly analyze a company and the soundness of its underlying business before buying its stocks. Next, you must deliberately protect yourself against serious loss. Lastly, you must aspire for adequate, not extraordinary performance. Sometimes, in fact, actually most of the time, consistent, adequate returns are much better than the inconsistent, extraordinary returns. Graham never stops reminding us that stocks do poorly or they do well in the future because the businesses behind the stocks do well or they do poorly. Nothing more, nothing less. Which is why he urges us only to invest if you would be comfortable owning the stock, even if you had no way to tell what its daily price level was. Which is why the defensive investor must confine him or herself to shares of important companies with long track records of profitable operations and in strong financial condition. Just like in my video over how Warren Buffett invests, he only invests in excellent businesses that have an expanding value. Another thing to add to this from that video is that Warren only invests in companies that produce products or supply services that he understands. This is a great idea for defensive investors because if you understand a company's product or services, it usually allows you to understand whether the company is worth investing in or not. But don't forget to do your homework on any investment that you're thinking about investing in. So, according to Graham, a defensive investor should at all times have a significant part of their portfolio in bond-type holdings and a significant part of their portfolio in equities or stocks. He suggests choosing a simple 50-50 division between the two, or varying between a minimum of 25% and a maximum of 75% between the two. The defensive investor is one that is interested mainly in safety plus freedom from bother, which is why Graham suggests varying between a 25% minimum and a 75% maximum between the two bond-type holdings or equities and stocks. So there are three supplementary concepts or practices that Graham mentions for the defensive investor. Number one is the purchases of the shares of well-established investment funds as an alternative to creating your own common stock portfolio. You might want to utilize one of the common trust funds or a Cumming-led funds. Number two, if his or her funds are substantial, then use the services of a recognized investment counsel firm. This will give him or her professional administration of his or her investment program along standard lines. Now, number three is use the device of dollar cost averaging, which is a device I actually mentioned in my video over what is intrinsic value. Dollar cost averaging simply means that the practitioner or investor invests the same amount of dollars each month or quarter into common stocks. This way, he or she buys more shares when the market is low than when the market is high. He or she is likely to end up with a satisfactory overall price for all of the shares that they have purchased. Before I get into Benjamin Graham's idea on what to invest in for a defensive investor, I have one more thing to say that I felt offered some really good advice for all of us that Mr. Graham stated. People who invest make money for themselves. People who speculate make money for their brokers. Now, I'm glad that y'all stuck around because I would like to share with y'all Benjamin Graham's idea on what to invest in for the defensive investor. So, according to Graham, the ideal way to dollar cost average is into a portfolio of index funds, which own every stock or bond worth having. This way, you can get out of the guessing game of which stocks, industries, and sectors of the market are going to go up or down and at what times, and which one of those will do best. Graham suggests investing into 3 index funds. That's right, just 3. So the first index fund that he suggests investing in is one that holds the entire US stock market. An example of this would be the Vanguard Total Stock Market Index Fund. The ticker symbol for this index fund is VTSMX. The second index fund that Graham suggests is one that holds foreign stocks. An example of this index fund would be the Vanguard FTSE All World ex-US Index Fund. The ticker symbol for this index fund is VEU. The third and final index fund that Graham suggests investing in is one that holds US bonds. An example of this one would be the Vanguard Total Bond Market Index Fund. The ticker symbol for this one is VBMFX. Now, I'm not saying that you have to go out and buy these index funds or start investing like Graham suggests, or that you have to invest in the index fund examples that I provided. However, I do feel that they are good investments. By investing like this, you can almost ensure that you own just about every single investment on the planet that is worth owning. So figure out a percentage of your monthly income to invest with and automate it to where every month you are buying more shares. Like I said earlier, a defensive investor is one that is mainly concerned about safety and freedom from bother, which is why this investment strategy that Benjamin Graham suggests is such a great strategy for defensive investors. Because once you own just about every stock that's worth owning in the world or on the planet, you're basically set. Then you have become an intelligent defensive investor. So, what's keeping you from becoming one? Well guys, I hope you enjoyed the video. If you did, scroll down, give it a like, and subscribe to the channel below. Also, if you have any questions, please post those down in the comment section and I will personally try and respond to each and every one of them. Look guys, I'm doing these videos because I feel like I might be able to reach out to someone with this information and help them out. But if you have any constructive criticism, whether it's what I talk about or the camera angles that I use, if you have any ideas on how I can make my videos better in order to help more people, please leave them down in the comment section. Follow us on Instagram at RWM Finance. Remember to check out the list of books in the description bar below, which I have the book that I discussed in this video, The Intelligent Investor by Benjamin Graham. It is down in the description bar below. Make sure to check it out. Another thing to remember is I post videos every Monday, Wednesday, and Friday, so make sure to tune in for the next one. As always, thank y'all for watching, and I will see y'all in the next video.